Okay, so okay, so guys, welcome to my YouTube channel again. Okay. Yeah, I'm back with another episode. Guys, I'm back with another episode. Guys, it's not looking good. The account is not looking good. I'm like about to blow the account, the Phase2 Propfirm account I've been trading. I'm about to blow it. Last week wasn't a good week. I still allowed my mindset to mess me up. I still allowed my mindset to mess me up. Meanwhile, I took three trades that last week. I took three trades last week, and those trades, two should have, two was a very good trade. Two was a very good trade, but due to lack of market volatility, it dropped. And one, I could have closed out with small profits, and then the other would have been a total loss. Then the other, the third trade I took, I took it without following my trading plan. Okay, so I'm going to show you guys here. I don't know, I don't know what's, let me just go ahead and show you guys the trade. Let me just go ahead and show you guys the trade, guys. I hope you guys had a very wonderful trading week. I hope you guys did have a wonderful trading week. So guys, you can see this trade, yeah? You can see that, let me shift this a bit. So you can see we had a lower low, lower high, lower low, lower high, a lower low here, lower high. Then you had a break of structure. So this is the break of structure for this. Like this. So this is the break of structure here. Take this out. So guys, as you can see, I don't know if you guys are seeing this, but as you can see, there's a structural liquidity here. First of all, what's my trading plan? Top-down analysis, mitigate. Let me see if I can use the test or something here. So what are my trading plans? Let me increase the font maybe to 18 or something. So my trading plan, guys, first one is I'm coming now, top down analysis. Then we have to I have, of course, I will mention mitigation. Then three, I'll check for order flow. Then fourth, I would also check for, I'll check if I'm on active, I'll check the time session. Time session check. Then fifth one, I'll check for liquidity. Sorry guys, liquidity check. Then on the sixth one will be my entry. Once I see liquidity, then I'll take my entry. Guys, the problem here is that I don't follow my trading plan. And the reason that is happening is because I'm ignorant of it. I will see seven is then I'll do my risk management. Risk management check. Then on 8, I will now do my trade management. I don't know if I can carry this. Okay, yeah. Okay, so these are this is my checklist. This is my checklist, guys. So this is what I normally do before I take any trade. Okay. And for this trade here, top-down analysis, I've already done my top-down analysis. So this is my top-down analysis. Here, mitigation, there's already a mitigation. Here, you can see there's mitigation. This other block has been mitigated. Okay. By right, this is where my other block should be. I know you guys are seeing this, but I went to the H1 and that was how I managed to get a perfect candle. So that's why the other block seems so very large. So my top-down analysis has been done. Mitigation has happened. Order flow, we are in a bullish trend. Then time session, we are, because I normally trade from 8 a.m. to 4 p.m. So this trade, I took this trade around, I took this trade around 2:30. Okay. Then liquidity, the structural liquidity here. You see, the structural liquidity in form of an asymmetric triangle. So the structural liquidity. Then entry check. Entry. I saw my entry because I normally do confirmation entry on the M1. Okay. I use candlestick entry confirmation. So I saw my entry. Then risk management, I gauged my risk very, very well. I usually risk $10 since I was in this strong a serious drawdown. Then trade management. In this trade management, I'll check for my SL. I check for my SL. I'll check for my TP. I'll check also I'll also check SL, TP. I'll check if there's any high impact news coming. I'll also check for if there's any trade barrier that can affect my trade. Then I will also check also for my market structure. That's my structural check. If I actually marked up my structure as well. Then I'll check for checklist alignment. Did I align? Did I follow my checklist? My checklist, all these things are written here. I'll start from top-down analysis again, mitigation check, order flow check, all those check. So I'll check off all these things before I take a trade. But okay, for this particular trade met up with all the criteria. Top-down analysis was there. I did it. Mitigation has already happened. Order flow, we are in line with the order flow. We are bullish. Time session, we took this trade between 8 a.m. and to 4 p.m., which is London open to New York. Towards New York close, but New York time. So this is what I trade. Then liquidity check. I saw this structural liquidity. Very perfect, very clear. Then entry check, I saw my confirmation entry. Risk management, I risked well. Then trade management, my SL, perfect SL, perfect TP. There was no upcoming news. My checklist have been checked out and everything is okay. Liquidity is there. So, but I took the trade and this candle here, this one that you're seeing here, uh, the candle, where did I even put that stuff? Okay, so this candle that you are seeing here, so this is a 5 p.m. candle. So I should have closed this trade here because normally once it's 5 p.m. I should have closed or taken partials, enough partials. You understand? Before I do leave it to 7. So I think that's why I was taking out. So but here I took small partial because I saw what was happening. This trade ran for like 1:2 before started going against me and took me out. You can see two positions here. This one I took partials here because I saw what was happening. Then it was once it was 5 for the remaining position. price started dropping. Immediately it was 5 p.m. and then took me out. So this one was basically what would I call it? This one was basically like I market just lost volatility and then dropped. The actual target for this trade was somewhere around here, 1:8, that kind of thing. But it is what it is. Let me not waste too much time here. So let's head over to the next trade, which was what was the next trade? That's GJ. So let's go to GJ, GBP, JPY. So I'm coming to GBP, JPY, guys. The same loss of momentum. The thing is, that's one thing with trading. You can do all your analysis correctly, your technicals are correct and everything, but the market will now decide on where to go, whether to go your direction or not. Your technicals might be very correct, but it's left for the market to now push price. And if there is other traders that are on the same trading the same direction that you are trading, they can help push the price to your direction. But you can see I took this trade here, my stop loss here, but you can see that the trade, I was targeting a 1:2, but the trade did not even push at all and then just hit my SL. Why? I saw this liquidity. You can see this is the trade, guys. So this is the trade, guys. We have a lower low, lower high, lower low, a break of structure price mitigated on this zone. So price mitigated on this one, pushed up, higher high, higher low, higher high. So this became my extreme zone. This is my inducement zone. Okay, so price just broke through my inducement zone, but there's this liquidity. This dotted line here is liquidity. There was liquidity here. Let me see if I can type anything there. So there's liquidity. There's liquidity beneath there. There was this liquidity on the 5 minutes. Yeah, if you go to the 5 minutes, you see that this move down and this move up, this lower low to this lower low here, there was a structure here on the M5 that this price action tapped on. There was a structure, there was a zone on the M5 here that this that was mitigated, then pushed up and caused a break of structure. So there's liquidity here, and price took that liquidity, then gave me my entry criteria somewhere around here with my stop loss here. I entered, it didn't even push much, and then it just took me out. And around here, it was already 5 p.m., 4 p.m., 4 p.m. And once it's 4 p.m., I don't place any trades again. 5 p.m., I'm supposed to take partials, enough partials, and then maybe leave the rest to run or go break even. So that's trade, my trading rule or my trading plan. Yeah. So loss of momentum made me to take this loss. On US 30, the same thing, the one I showed you guys, that one pushed for 1:2, but stopped me out. I should have closed, I should have taken enough partials when it was 5 p.m., but I left it and then the trade just went against me. Now, yeah. So the last one I took for the week again is this one. If you watched my last episode, there was a mistake I said that I made, and I repeated the same mistake, guys. I repeated the same mistake here. Here you can see that there's a zone here. Okay, I don't know if it's is it control X, control V? Okay, so control V. Okay, so guys, you can see my checklist again. Top-down analysis was done. Mitigation here, you can see the mitigation. Then order flow, we are in a bullish order flow. Then time session check. I entered this trade around, I think around, where the trade around? Let me check. I took this trade around one. I took this trade around 130. So, and liquidity, yes. So I saw this liquidity. There is a trendline liquidity in front of this zone. I didn't see any external, I didn't see any internal, I didn't see any structural liquidity, but I saw this in frontal liquidity right here. So when I saw this frontal liquidity, I I saw the frontal liquidity, but if you go to the M30, which is my entry time frame, I saw that there was a lower low, internal lower low, then the formation of my liquidity, and this lower low was yet to be broken. And I can see signs that the market wants to break it. This liquidity showed up like a trendline liquidity in front of my zone, but the if you come to the M30, it looks like a structure. It is a structure, not like it looks, it's a structure yet to be broken or not to be broken. So if this bearish structure was not broken, this trade would have worked. But what I should have done was to wait on this M30 to see if this low, this lower low, this internal structure, if it will be broken. Because the way this trade happened was that the market printed these bearish candles, printed the liquidity, this trendline liquidity that we are seeing here, this trendline liquidity that you are seeing here, printed it. Then this big red candle that we are seeing happened so fast and mitigated this zone. So immediately it mitigated this zone. I saw my entry. This is my entry here. I saw my entry, my candlestick confirmation entry. Then I took the trade at this level that you guys are seeing now. So, but price action was still moving up and down. You can see that this candle is an aggressive candle. This candle here is an aggressive candle. So you can see it was still moving up and down, up and down, up and down. Am I going to close this low or not? Am I going to close this low or not? But eventually, it closed this low and made this a structure on its own. The meaning of this, guys, or the long story here, the short story here, the summary of this is that this liquidity, this trendline liquidity here that I saw for this zone ended up immediately. This low was closed by this big bearish candle, ended up being inherited. This liquidity was eventually or finally inherited by this structure. So this trendline liquidity now became the liquidity for this zone, for this internal structure, for this bearish structure. This liquidity it no longer belongs to this zone. Is now trapped inside this bearish distance. So that meaning that there's no liquidity that was left for this or that was taken for this. So what I should have done was to wait for this to know if this low will be broken, if there will be candlestick closure that will now make this a structure. So if I had waited and I see something like this that has happened, what I will do is that I will not take this trade. This trade, I will not take this entry. I'll just wait for a re-entry, which never happened. You can see that the zone eventually failed, and then price just went all the way down. The zone failed. So I wouldn't have partaken in this trade. But I did because of FOMO, guys. I should have waited, but because of FOMO, I wanted to be part of the trade. I just took the trade. Yes. So the account is sitting at I don't know why my FundedNext is not opening. I don't know why. So let me just say this before I start trying to see if I can open my FundedNext. Guys, my problem is FOMO. Before I said it was ignorance. FOMO can be hidden. Before I said it was ignorance. Before I said it was my problem is FOMO, guys. Before I said it was ignorance. Before I said it was an assumption. You understand? Because I will keep assuming. and in FOMO, you have ignorance. In FOMO, you have ignorance, you have assumption, you have these two things. You ignore your checklist. This is my checklist. The main work in this my checklist is number 5 and 6. If I can get this number 5 and 6, these other ones are simple. My trade management is also important, like number 5, number 6, number 8. This 5, 6, 8 is the main thing. If I can get this thing, you understand? If I can follow my trading plan on this, everything I need to see on this, liquidity check, entry check, trade management, these ones, I'm not the type that over risk like that. I'm not the type that over risk. In fact, last month I took a total of 14 trades. Last month I took a total of 14 trades, guys. I took a total of 14 trades. Total of 14 trades. Yeah. So these 14 trades now, we had 4 wins. I think 8 losses. Yes, 8 losses. And then 2 break-evens. Break-even. 4 wins. And these wins were 1:1. 1:1. There was some trades I took. This is July. This is for July, guys. This is my July for the month of July. July trades. 14 trades on July, 4 wins. All of them were 1:1. That's 1 hour, $10. Then in these 8 losses, six of the losses were because I didn't follow my trading plan. Then 2 was just loss of momentum. There was no volume in the market. That was why I lost the other 2. Or 6 was entirely because I didn't follow my trading plan. Entirely because I didn't follow my trading plan. Then 2 break-evens. Break-even, there was no win, there was no loss. So this one doesn't bother me. But the one that bothers me, so imagine that I managed my emotions well. I didn't allow FOMO that was instigated because I want to partake in the trade. I now ignored my trading plan or my checklist. So for some trades, I'll be like, I am seeing that this thing is wrong, but I will assume that it is okay, that markets can just go in my direction for no just cause, because I want to partake in the trade. And that is foolishness. That is an amateur way of trading. You already have a trading plan that works, and I just go ahead. So that means for the month of July, if I minus those losses and I just factor in the 2 losses that happened because of poor volatility in the market, I would have just ended the month with just 2 hour. That's 4 wins, 4 hour minus 2 hour. Those losing trades due to poor volatility. I will just have 2 hour left. You understand? I just have 2 hour left, guys. It would have been a profitable month, even though I didn't see 1:2, 1:5, as I usually used to see. There was just 1:1, 1:1. It was crazy, man. So July wasn't a good month for me. And still, I allowed my psychology to fuck me up. Fear of missing out. So I kept on wondering, like, how do I solve this fear of missing out? How do I solve this? It gave me a very huge concern, and I was thinking about it, and God helping me, I thought of it, and I was like, okay, I should apply delayed gratification, because I realized that when this FOMO usually come in is within this space of me checking my trading plan and execution. See, trading is 90% trading. This thing that professional traders are saying, trading is trading, guys, is 90% 90% waiting and 10%, guys, believe you me, that's what it is, and 10% execution. But do you know what I do? This is the correct thing. This is the right thing. This is the right thing, guys. This is the right thing, guys. This is what trading is. Professional trading. Professional, professional, professionals, professional traders. This is what they do. But an amateur trader, what do we do? What do we do as amateur traders? We do the opposite. Amateur, amateur traders. What do we do? We do 90%. Check it, guys. Those that have FOMO, check this. This is what you do. This is what you do. You do 90% execution. Sorry, yes, 90% execution. And then you do 10% waiting. Guys, it's crazy, man. You do 10%, you do 10% waiting, and then 90% execution. So place this side by side. You see, this is what we are doing, guys. Professional traders, they do 90% waiting. That means what I should have done is once price mitigates, because when I start when I start considering my checklist, when I start considering this checklist that we are seeing here, is once there's a mitigation, I'll start doing all these things. That is when I start checking my checklist. That's when all these things start happening. You understand? So once there's mitigation, I'll start checking for liquidity, time session, order flow, all these things. Now, what I should have done is immediately I see that my entry is ready, I should just wait and check all these things and make sure that all of them are in alignment. I will take my time, because normally my fear is that on that 1 minute, that price will just leave me, because I trade candlesticks confirmation, and you know the M1 is very fast. That price will just leave me and start going my direction all of a sudden. So, but that's the mistake I'm making. So I should have waited 90%. This is what I'm doing. I don't wait. I'll just enter, because I want to take part and make money without checking off this checklist properly. So guys, that is the thing. That's the thing. My phase one, so people ask me, how do I manage to pass my phase one? My phase one, I remember the mindset I was using to trade the phase one it's not the same mindset I'm using to trade the phase two. There's what they call mental discipline, guys, and mental conditioning. On that phase one, I know that this 5K account is the only account I have. So I was so cautious. Even when I was in drawdown of 3%, I make it back up. I lose it again. I make it back up. Like, my mentor, I was still following my rules to a certain extent, to a very high extent. And I was very cautious of the trades I take. What even helped me to pass that phase one was some little tweaks I did in my trading strategy when it comes to my win rate. I went to my M1 and I started doing candlestick. That was the time I started doing candlesticks confirmation. And there's this candlestick confirmation that I usually do and apply that gives me up to 1:5, depending on the entry model that I'm trading. You understand? So that was the change I did that helped me catch 1:20 RR. And that helped me leap to high profit. And that was also what helped me to pass my phase one. But when I entered into the phase two, there was a new psychology that came in. I wanted to pass the account so fast. Hence, I entered into a massive drawdown. Then when I was in this massive drawdown, I was so frustrated, so depressed, and I started taking things out of my trading. Because I saw that my win rate was affected. So if your win rate is affected, that means maybe you are trading two concepts. One is making you money. The other one, you don't know, is taking money away from you. So you have to check your journal and see, okay, this one is giving me money. This one is taking away the money that I'm making. Let me stop doing this. What will help you to discover this is your journaling. You must keep proper journals, consistent journals, guys. If you're not consistent, try to be consistent, but no, and this your journal will be building up. It will help you have enough data that you can look back at and see, okay, this strategy is giving me money, but not enough. It's even taking the ones, the others, the profits that the other strategy I'm trading is giving me. So I was trading two strategies, so I had to drop one. So I started dropping so many things, and that helped me to have a stable win rate. Then I even see 28% win rate around April, May, when I started trading this my phase two. Guys, it was crazy. So I managed, and I started sticking to my checklist. And then what I was doing was I was doing more of waiting. I was doing more of waiting. Before I enter any trade, I must check this checklist properly. Now I can remember. And it helped me push my account from 6% drawdown to about 2% to break even. But I lost it all. And now I'm about to blow this account. Like the account balance, guys, I might not have time to go to my FundedNext, but the account balance currently is 4,610. So if I lose $12, guys, I've blown this account. Once I lose $10 on the account, I will blow the account, and then I will just start afresh. There, boomers. So that's just it, guys. That's just it. Just try and know the trading defects that you have, issues that you are having with your account, and try to solve it. If it's FOMO, remember the solution to FOMO. What's the solution to FOMO, guys? The solution to FOMO is what? Delayed gratification. gratification- Sorry, gratification. Okay, so delayed gratification. So before you take that trade, don't rush to lose money. Just be patient and just take your time to go through your checklist. This is my checklist. So you must have a mechanical checklist that you normally consider before you take trades. So make sure you take time, delay yourself. That entry can wait. Just check this checklist. That entry can wait. Once you check it and it aligns, then you can take that trade, even if it's a 1:1. Me, I don't take any trade that is less than 1:1. So even if, as from now, as for this is what I'll be doing, delayed gratification. I must check this thing off. Even if the entry wants to leave me, let it leave me. But as long as I do this, then I can be confident enough to take the trade. So guys, I'll catch you guys up on the next video. Try and subscribe, like, and comment on this YouTube. Okay. I see you guys next week. Okay. So cheers. Take care. Mom, woman.